First, we go at a high level through each of the major sort of asset classes. I won't go into them in super detail, but the general trend, and you'll see this through the rest of the deck, is that values and lease rates really will continue to soar throughout 2024. We'll start with the new generation narrow bodies. We're seeing values continuing to rise there. The Max 8 and the Neo being on a relatively even footing, and not only values, but also lease rates increasing. We saw strong gains last year and will continue this year. Likewise, the 320CO and the 737NG. So we're seeing a strong recovery in values and lease rates there. I spoke already about the extensions being above 90%. That's keeping supply really tight. And a lot of that's driven by the engine and reliability issues that we've seen and heard from in Stu's presentation. On the turboprop side, we don't have any specific slides on this, but seeing some really positive trends here. Supply is very limited, both in terms of new aircraft. So only in the sort of 70 seat space, we're only seeing ATR delivering aircraft for that new aircraft. And the ramp up recovery in terms of production has been quite slow there. So that's driven a lot of activity in the secondary market, very little availability of aircraft now. Keeping a little bit in the regional market, the new generation crossovers, so the large regional jet, the one E195, E2, and also the smallest narrow body there, the A220, we're seeing values recovering quite strongly, demand growing there for the E2, although the A220 is performing better from a value perspective. Moving on now for the factory freighters, again, another green arrow uptick. We've seen either a stable or a positive outlook for factory freighters. Some positive trends in the freighters that moves into the conversions as well. So we did see some softening on 737-800 values and lease rates. That started to revert and to recover with that demand recovery that Dan showed us in terms of the FTKs. So we're moving out of that soft period, and we've seen maybe 10-15% improvement in terms of market values on aircraft like the 737-800. So moving out of the woods there. Wide bodies, we're very much seeing the recovery following the narrow bodies that we saw last year. So some strong recovery in lease rates, particularly for the midlife, which we'll show you in a couple of charts' time. And we've seen that flurry of orders that Stu showed us, particularly for 787s, A350s that we saw last year. So really mimicking that earlier recovery that we saw on the narrow body side. And lastly, the regional jets. So the sort of legacy products there, the E-jets. We've seen quite a strong uptick in demand. I know Stu mentioned that availability that had been moving in some of his charts. We've seen, again, a sort of, I'd say, a 10-15% improvement in market values on the larger E-jets. I think some of that starvation of supply in the narrow body market is aiding some of the E-jets. And there's quite a few. Look at the E195. There's a number of operators that are looking for lift there, maybe 4 or 5 in the secondary market, but there just isn't availability. So that's driving some of that positive movement.